What if one phone call could uncover a senior exemption, tax freeze, refund, or credit that helps protect your home, money, and peace of mind? Watch now.
Do you know which relief deadlines could determine whether you save money or lose benefits this year? Watch now.
Could turning 65 unlock valuable tax deductions, exemptions, and credits you may be missing? Watch now here at Secure 65 Health Plans.
Protect what you build. Protect what you build. Protect what you love. Protect what you love. Stand strong before the storm and rise above. Give your family direction. Give your loved ones a voice. The best time to prepare is while you still have a choice. Protect what you build. Protect what you build. Protect what you love. Protect what you love. Let your legacy reflect everything you dreamed of.
Talk Power Thursday. Do seniors really stop paying taxes after 65? Hi, guys. Have you ever noticed that the moment you turn 65, everybody wants to celebrate your wisdom, admire your resilience, and offer you 10% off breakfast? But nobody sits down and explains which bills may actually go down. Apparently, a discounted cup of coffee is considered a complete retirement strategy.
You built something meaningful with every choice you made. But life can change quickly without warning or sign.
Welcome, everyone, to Talk Power Thursday, where we don't just repeat what sounds good, we ask questions, check the details, and make sure you know what to do next. So today we're talking about a subject that can make a senior sit up straighter than hearing somebody say, "Your refund has been approved." Do seniors really stop paying taxes after 65? Well, the short answer is no, not automatically. The better answer is that turning 65 may open the doors to deductions, exemptions, credits, freezes, deferrals, and other programs that could reduce certain taxes. But you have to usually find the program. You got to meet the rules, complete the application, and file it on time. Because the government is not likely to arrive at your home with balloons, a cake, and a property tax exemption form. You got to ask, right? So before we get into it, if you like our content, please share this video, like it, subscribe to our channel, and hit that notification bell so you don't miss any of our videos. When you share this information, you may help a senior discover a benefit, avoid an expensive mistake, or ask a question they didn't know they needed to ask. That's how we turn information into power. Now let's clear up the biggest misunderstanding first. There is no federal rule that says every American stops paying taxes at 65. I know. That sentence did not come with confetti. Your age alone does not automatically erase federal income tax, state income tax, property tax, sales tax, or taxes connected to wages and self-employment. If you continue working, receive pension income, withdraw money from certain retirement accounts, collect investment income, or receive other taxable income, you may still have to file and pay taxes, okay? Even Social Security benefits can be taxable depending on your total income and your filing status. Retirement may change your tax picture completely, but it does not make the picture disappear. Now, there is good news. For tax years 2025 through 2028, Eligible taxpayers age 65 or older may claim an additional federal senior deduction of up to $6,000 per person if you're eligible, or $12,000 for married couples when both spouses qualify. Now that deduction has income limits and phase-out rules, and it's separate from the existing additional standard deduction for older taxpayers, okay? Notice the important word, deduction. A deduction can reduce income on which tax is calculated, right? It's not the same thing as the government announcing, congratulations on your birthday, okay? We have canceled your taxes. Now, it's not that. But if someone tells you that all seniors pay no federal income tax after 65, ask them to show you how it works and show you the actual rule. Friendly confidence is wonderful. Friendly confidence with the wrong information is still wrong. So the same caution applies to property taxes. Property tax relief is local. Your state, county, city, township, or other taxing authorities set the rules, okay? Your neighbor across a state line may qualify for something you don't, and you may have a benefit your neighbor has never even heard about. Eligibility may depend on age, income, disability, veteran status, how long you've owned the home, and whether it is your primary residence, and whether you filed by the deadline, okay? That's why we're not going to give you one national dollar amount and pretend it fits everybody. That would be very convenient, very dramatic, and very inaccurate. We respect you guys too much for that. That's nonsense. But what we can do is give you a checklist of 8 common forms of relief categories to investigate, okay? The exact name will vary upon where you live, so remember that. Your job is not to memorize every tax law in America. Your job is to know what to ask your local tax assessor, appraisal district, revenue department, or state tax agency. Now, the first is the homestead exemption. This is often connected to the home you own and use as your primary residence. So depending on the jurisdiction, it may reduce the taxable value of your home or provide another form of protection, okay? Some people assume it was automatically handled when they bought the house. That is incorrect. That assumption can sit quietly for years, drinking coffee and costing you money. So you got to call the appropriate local office and ask, is a homestead exemption currently recorded for my property in my name? And if not, what application do I need? What documents are required? And what is the deadline? Don't simply ask, am I good? Okay, good is not a line on the tax record. Ask for the name of the exemption and confirmation that it is active. The second is a senior or age-based property tax exemption. Some jurisdictions offer additional relief beginning at 65. Others use a different qualifying age. Some have income limits. Some don't. Some require annual renewal. Others remain in place until your circumstances change. So please don't assume that the office will send you a birthday card with the application, okay? Now, I want you to ask, does this jurisdiction offer an age-based exemption for homeowners? What age qualifies? Is there an income limit? Does it reduce the entire bill or only certain portions? Must I reapply every year? And that final question matters because a benefit that expires quietly can produce a bill that arrives very loudly, okay? The third is an assessment freeze or tax ceiling. Depending on local law, you guys, a freeze may limit increases in assessed value, while a ceiling may limit certain parts of the tax bill. Now, those are not always the same, okay? A frozen asset value does not necessarily mean every dollar of the total bill can never change. tax rates, special assessments, voter-approved charges, improvements to the property, or a change in ownership can affect the result. So ask the office to explain what is frozen, what can still increase, and what could cause the protection to end. Okay? Because if someone answers with 3 acronyms and a sigh, politely ask them to explain it in plain English. Okay? You're not applying for a job at the assessor's office. You're simply trying to understand your own home. The 4th is a circuit breaker credit. Now, this usually connects property taxes or sometimes rent treated as including property tax to household income. Okay? So when housing related taxes take up more than a specific share of income, a state program may provide a credit or refund. Now, these programs may be claimed on a state income tax return or a separate application. That means a person who owes little or no state income tax may still need to file paperwork to receive the benefit. Ask your state tax agency, do you offer a property tax circuit breaker credit or a renter's credit? Can I qualify even if I don't otherwise have to file a state return? That one question may uncover a program hidden behind a name that sounds like it belongs to an electrical panel. The 5th is a property tax deferral. Now, a deferral does not necessarily forgive the tax, you guys. It just postpones payments, and the unpaid amount may become a lien against the home, sometimes with interest or even fees. Now, the balance may become due when the home is sold, refinanced, transferred, or after the owner dies. For a homeowner with substantial home equity but limited monthly cash flow, a deferral may help them remain in the home. But this is not free money, you guys, and it can affect heirs, estate planning, mortgages, and future proceeds from a sale. So before choosing it, request a written explanation of the interest rate, lien terms, repayment triggers, effect on a mortgage, and effect on your estate. Then discuss it with a qualified tax or legal professional. A deferral can be useful. It should never be treated like a coupon, though. Okay? The 6th is a disability-based exemption or credit. Some jurisdictions offer property tax relief to qualifying people with disabilities, even if they are younger than 65. Now, the program may require an official disability determination, proof of residency, income documentation, or other records. So if you or someone you help lives with a disability, don't stop at the word senior. Ask whether the jurisdiction has a separate disability exemption and whether it can be combined with a homestead benefit and which agency's documentation accepts it. Age and disability programs may overlap, but they are not always interchangeable everywhere, okay? The 7th is a disabled veteran exemption. Many jurisdictions offer special property tax relief based on service-connected disability, and the amount of the type of relief may depend on the disability rating and other conditions. So benefits for surviving spouses may also exist, but the rules can include residence requirements, remarriage rules, deadlines, and separate applications. So if you served or your spouse served, contact the local tax office and a veterans benefit office. Ask whether the exemption can be combined with other relief and whether the surviving spouse must reapply. Okay? Your service deserves more than somebody saying, I think there's a program out there. Get the program name, the form, and the written eligibility rules. The 8th is a surviving spouse continuation or carryover. When a spouse dies, some tax benefits may continue. Some may change and others may require new filings, you guys. So this is one of the worst times to discover that an exemption did not transfer automatically. Grief is already a full-time responsibility. It should not come with a surprise tax increase because one box was never checked. If you recently lost a spouse or you are helping a parent who did, ask the local office to review every exemption on the property and explain which must be refiled in the survivor's name. Ask for deadlines in writing. If both spouses are living, have this conversation now, you guys, right now. Planning is not pessimism. Planning is kindness in advance. And let me pause here to thank our sponsor, Vivix Wealth and Insurance Solutions, for supporting senior education and helping families ask better questions about money, protection, and retirement. Okay? Now, let's pause to watch Austin Blockson's comic on seniors and paying taxes after 65. Austin, take it away.
Secure 65 health plans where seniors thrive. Secure 65.
And we're back. Now, if that comic made you want to call the county office before they close, good. Just don't call and say, Austin and Monet said, I don't have to pay taxes anymore. Don't do that, okay? Please don't put that on us. Kind of sort of say, I'm 65 or older, and I would like a complete review of every exemption, every credit, every freeze, every ceiling, every refund, and deferral that may apply to my property and income. That sentence is accurate, serious, and much more likely to get you useful information. Now, here's another tool many homeowners overlook: the right to challenge or appeal an assessment. Your property tax bill is generally based in part on the assessed value of your home. So if the property record contains errors, ignores significant damage, lists features you don't have, or uses inappropriate comparable properties, there may be a process to contest it, okay? And the deadline can be short. Review your assessment notice as soon as it arrives. Check the square footage, the lot size, number of rooms, improvements, classifications, and comparable sales. If the record says you have a luxury swimming pool and you are looking out the window at a bird bath, we have found a problem. Ask the assessor's office how to obtain your property record card, okay? How to file an appeal, what evidence is accepted, and when the appeal must be received, okay? Useful evidence may include recent comparable sales, photographs, repair estimates, an independent appraisal or documentation of factual errors. And you guys, don't exaggerate. Don't insult the assessor. Don't walk in announcing that your home is a palace when you want to sell it and a storage shed when the tax bill arrives, okay? Bring the facts. Facts have better posture in a hearing. Now, what if you apply for relief and receive a denial? First, don't panic. Second, don't ignore it. Read the notice carefully. A denial may result from missing documentation, an incorrect date, an eligibility issue, or a filing deadline. Ask for the specific reason in writing and the exact appeal procedure. Confirm the deadline, the office that receives the appeal, who that is, and whether you need to pay the current bill while the appeal is pending. Never ever assume that filing an appeal automatically causes penalties or collections, okay? Keep copies of every form attachment, envelope, confirmation number, email, and letter. And you guys, if you deliver something in person, request a stamped copy. Okay? Paperwork has a remarkable ability to become invisible the moment it enters a large building. So now let's talk about federal income taxes and Social Security, because this is where headlines can create trouble. If Social Security is your only income, your benefits may not be taxable, and you may not have to file a federal return. But if you also receive wages, a pension, interest, dividends, retirement account distributions, rental income, or other income, some of your Social Security benefits may become taxable, and you may have a filing requirement. Okay. And my married couples filing jointly must consider combined income. Okay. Retirement income does not all receive identical tax treatment. A Roth distribution may be treated differently from a traditional IRA distribution. A pension may be treated differently from a return of basis in an annuity. This is why I'm retired is not enough information to calculate a tax bill. So you guys, before withdrawing a large amount from a retirement account, selling an investment, converting more to a Roth account, or changing how you receive income, ask how that decision could affect your federal and state taxes, the taxation of Social Security benefits, and your Medicare income related premiums. Okay. A transaction that looks helpful in isolation can bump into something else. Retirement planning is a group project, whether the rules admit it or not. So here is your practical action plan. First, collect your latest federal and state tax returns, property tax bill, assessment notice, Social Security statement, pension and annuity statements, retirement account statements, and proof of age, residency, disability, or veteran status if relevant. Okay. Second, call your local assessor, appraisal district, or tax collector and ask for a complete list of homeowner relief programs. Third, contact your state tax agency and ask about senior deductions, pension exclusions, circuit breaker credits, renter credits, and filing requirements. Fourth, speak with a qualified tax professional before making any decisions involving liens, deferrals, large withdrawals, property transfers, trust, or estate planning. And fifth, put everything on your calendar with their deadlines. Eligibility without an application is just a lovely possibility. You can use this exact telephone script. Ready? Hello, my name is blank. I own and live in my home at blank. I am blank years old. I would like to confirm every property tax exemption and relief program currently attached to my property. Please tell me whether I may qualify for a homestead exemption, senior exemption, assessment freeze or ceiling, circuit breaker credit, tax deferral, disability exemption, veteran exemption, or surviving spouse benefit. Please also tell me the application name, required documents, filing deadline, renewal requirements, and appeal process. May I receive that information in writing? Then you guys write down the representative's name, the date, the telephone number, and what you were told. Now, if the answer is it's all online, ask for the exact web page and phone number. Okay. The internet is a large place. Now, somewhere online is not an address. So don't be disturbed when they act like that. And please watch for scams. Okay. Because a legitimate government benefit does not require you to give a stranger remote access to your computer, buy gift cards, pay with cryptocurrency, or reveal your Medicare number over an unsolicited call. Be cautious, okay? Just with these companies promising to eliminate all taxes or recover thousands of dollars before reviewing your records, I doubt it, okay? Ask how they are paid, whether a fee is charged, even if no savings are found, and whether an appeal could put your assessed value at risk. Opportunity is good. Pressure is suspicious. The power in today's conversation is not the promise that every senior will pay nothing, okay? The power is knowing that you may have options, knowing where to ask, and refusing to let confusion make the decision for you. So some of you may discover a meaningful exemption. Some may find a credit. Some may learn that a deferral is not right for your family. Some may confirm that your current tax treatment is correct. All four outcomes are valuable because informed decisions, well, it protects your money and your peace of mind. So, Secure 65 Health Plans is the educational arm of Vivix Wealth and Insurance Solutions and Collaborative Expansion Foundation. I want you to know that because through Collaborative Expansion Foundation, senior advocates and our planning assistants are available to provide guidance and support on Medicare, life insurance, annuities, Social Security, trusts, and retirement planning. You can sit down and talk with a senior advocate for free about any of these topics. Now, this is an opportunity to ask questions, organize your concerns, and understand what your next step may be. It's not a substitute, you guys, for individualized tax or legal advice. And when your situation requires a licensed tax professional or attorney, we want you to know what to do and how to do it. So call us today at 833-300-4968 or email us at info@secure65healthplans.com. And don't forget to sign up now for your Medicare review. You guys, we get inundated later. Don't get caught without being informed, assisted, and supported when making insurance decisions. I'm Moné Swann. Stay happy, stay healthy, stay informed, and be golden. And remember, I love you guys. Enjoy the rest of your week, okay? Find all your information that we talked about today in the show notes, okay? Have a good one. Bye-bye.
Your legacy is not only what you leave behind, it is the peace you give them during their hardest time. It is love with direct.
Vivx Wealth Insurance Solutions.